Good morning, everyone. This is Scott Thompson, and we are here for our Stock Investing for Beginners webcast. Want to give a huge shout out to those that are attending today here with us live. Will, Sharon, Lawrence, Texas Beach Bum, Rob, welcome. Good to see you. Mike Fairborn's there. Eva's in the chat or as well. Thank you for taking time out of your busy schedule to join me today. A lot of stuff to cover today, but invitation to follow Mike and me on x.com at Scott Thompson CS or at Mike Fairborn CS. Please remember, we won't be soliciting anything from you on our x.com. So we do see some imposters, so be aware of that. Anyway, great to be here with you today. We had a volatile day, a big day on Friday, right? One of the things that's really challenging about trading a strategy, like in our case, we're trading a few different investing plans. We're doing some updates on some things like that every week. But we have a strategy that we're trading as well. We call it two green arrows, where we're buying stocks with the intention of holding them until the trend changes. But on a day like Friday, one of the things that comes up, and I remember feeling this way when I first started investing myself, is like, I hate this plan. I don't want to trade this anymore. I want to do something different. So many of you have been asking about taking profits on your trades and things like that. And so I want to address some of those issues today. I want to give you some tools, one of which is a trading journal. Show you kind of how to use that, which I think is really useful. But also just talk about some investor psychology behind, when you have a big down day in the market and your whole portfolio looks horrible compared to where it was the day before. So let's just jump right in. I want to remind everybody our presentation today is for informational purposes only, not a recommendation of any particular investment strategy or investing ways. We're going to cover the Schwab stock slices just again briefly today, just to give you an update on the portfolio and remind everybody that the Schwab stock slices is not intended to be investment advice or a recommendation of any particular stock. Investing in stocks can be volatile and involves risk, including loss of principal. We are using the paper money platform as always, and there are some significant differences between paper money and the live money, so be aware of that. We'll be talking about some stop orders today. Just remember, stop orders trigger a market order, so we're not guaranteed to get filled at or near that stop price. On a day like Friday, it's very common actually to have your stops hit and then get filled at a lower price where the market's really moving against your goals, right? So anyway, I wanted to cover that, but let me show you first here some of the resources that are available to you on the various different websites. So we of course have our YouTube Trader Talks from Schwab Coaching webcast page. This is a great resource. If you're on that page, you'll see the live session going on. We'll be here at the top. If there isn't anything live happening in the next, say, 10 minutes or so, then you can look at this live or upcoming live streams, and it'll just give you what's coming up for that particular day. What I wanted to do is jump over here to where it says playlist, and the playlist is it's a big group of all the different playlists that we've ever had on the Trader Talks page. We have our bite-sized content. I talked about this a little bit briefly on last week. Here's our Schwab Investing for Beginners playlist. I'm going to click this view full playlist, and you can see all of the webcasts that we've done. I added a couple of these little short videos that we did on the intrinsic value calculator, and then I did a short little video on just the buy signal for our 2 green arrow sample investing plan. So that's there. You can go back and watch those. I did want to show you, in our webcast, and already we've seen some questions come through. Mike will do a fantastic job of answering those questions. But what I like to do at the end of every session, and I'm going to pull up this webcast. If you click on the little, thumbnail here, it'll pull up the webcast. And if you scroll down a little bit, in the comments section, what I'll do usually is I'll go back through the questions. If Mike wasn't able to get to those during the chat, then what I'll like to do is add them into our YouTube comments section. So I'll go through there and then, post the question and then give an answer to that as well. So if you had a question during the seminar or during our presentation live and you don't feel like we got it answered, then go check the comments there. And I've answered a lot of those questions in that YouTube section of the comments on the archive, which we try to archive every session that we do, and that's where you can find those answers. The other really great resource I wanted to show you is if you go to, again, back on the, like you're on the home page, but if you click here on posts, we have our weekly schedule just here kind of as in a thumbnail of the different things that are available to us. Here's my class today, Stock Investing for Beginners. But one of the things that's come up fairly frequently in our webcasts are questions about taking profit and how do we do that. So this particular plan, this 2 green arrow plan that we have, doesn't really have a targeting mechanism in it. We adjust the stop up, which I'll show you. I need to adjust a few stops today on some of our open positions, and we got stopped out of a few others on Friday as well, just with the market dropping as much as it did. But if you want to see some webcasts that are more target oriented, there's 2 really good ones. Investing Masters series that James Boyd does on Tuesdays at 11 a.m. Eastern time. He has, a complete, this is more of a whole portfolio management type of idea. He talks about protection in your portfolio. And then Mike Fairborn, who's in the chat, does one at 3 p.m. Eastern on Tuesday. Is called swing trading. And that particular method of trading is actually shorter term, where you're actually looking for targets and you generally plan that target exit at the same time you do your entry. So, but our plan is more of a trend trading plan. It doesn't have a target exit per se. It just, we get out if the trend changes, and that's usually meaning that it's dropped below the 50-day moving average. And we'll look at some of those examples today. Now, the last little resource I want to show you today is on the Schwab coaching page. If you go to Schwab coaching webcast, let me chat this into the chats there, this webcast link. But if you go to this Schwab coaching webcast and go to the live webcast and virtual workshops, and then scroll down here and change it from month to list, that'll give you today's sessions. But check this out. This is really cool. If you click on our session, Stock Investing for Beginners, it'll pull up our Stock for Investing for Beginners page. And right if you scroll down a little bit here to where it says resources, there's a trading journal. And this trading journal is really kind of cool. And I wanted to show you how to use that today. But you can download the trading journal. If you click on that, it'll throw download or give you a link to download it. There's 2 little short videos that you can watch right here to learn how to use it, but I'll show you kind of how to use it today as well. And this is what it looks like. Let me just pull this up and also give you a little bit of a disclosure here. The information on the trading journals for informational purposes only, not guaranteed for accuracy. And there's different instructions here, but we're going to go to this strategy 1 page here. And I filled some of this out for the stocks that have recently stopped out. So I wanted to show you that. And then we're going to do a new buy today. So I wanted to show you how to input that data. And so we'll come back to that here in a minute. All right. So anyway, let me go over here to our Thinkorswim page and give you just an update. Here on the left side in our gadgets window, here's just a brief summary of the different plans that we're doing. Last week we did a bonus live only session kind of giving an update on our S&P 500 and NASDAQ 100 tracking portfolio that we're doing this morning. And I just wanted to show you this. This is a simulation. If you go to episode 2, this is where we started to talk about the Schwab stock slices, which again is not a recommendation, but this allows you to buy partial shares of the S&P 500 stocks. And so what we're doing is we're investing about $50 per week in these session or in these particular equities. Again, not a recommendation. And because the Thinkorswim paper money doesn't allow you to actually buy partial shares, we're kind of doing a forced position adjustment is what it looks like. But if you right click on the symbol what we're doing is going in here and adjusting the position. And this would be very similar as if you were going to buy $5 or more worth of Apple in the Schwab stock slices, and it will give you a partial share. And so I wanted to show you what I've been doing every Monday for the last, 7, 8 weeks now. But let me show you. So, all of these are the top 10 holdings of the ETFs that track the S&P 500 and the NASDAQ. And if you come over here and click on the P&L open, you can see the different purchase dates. And so I've been doing this since the 9th of June, and we've just been kind of simulating what you could do using the Schwab stock slices on schwab.com. And, the interesting thing I guess I wanted to show is that with the market kind of dropping dramatically, you can see my purchase prices here. As Apple's moved around the week before on the 28th of July, we bought, some partial shares at 214. And then this morning, because of the drop that we saw on Friday, I was able to get in at 204. And you can see this method kind of dollar cost averages your stock price here. And in this particular case, we're net up about 10 cents on almost a quarter of a share. And so it's a little interesting to kind of do this as partial shares. But again, we're trying to simulate investing $50 a week in each of the top 10 holdings of those tracking instruments using the Schwab stock slices. And again, that's not a recommendation to use stock slices or invest in any of those particular stock. Okay, so that's kind of how that works. I wanted to give you an update on what we're doing. And now I wanted to go down and spend the rest of the time going through kind of our open positions. I wanted to take a look at several of these. We got stopped out of a few that I wanted to go over first and talk about the rules associated with our 2 green arrow plan. If you're new visiting here with us today, thanks for being here, number one. Number two is if you go watch episode 3 on that playlist that I shared with you earlier, you can see all of the rules associated with that. And we've been going through this every week, kind of updating and talking about those rules and answering questions regarding the rules as we go through here. But let's go ahead and just give you a brief overview here. We're trying to invest in the S&P 100 stocks. That's a public watch list that's available that you can get here in your scratch pad. You can switch the gadget and go to watch list and then just pull up the public watch list here and see those. We're using a MACD histogram and we're using a 50-period moving average. And the idea is to buy stocks that are uptrending and then hold those until the trend is over. And we're moving our stop up with a specific methodology. When we get a buy signal, we set the stop 1% below the 50-period moving average. And then as we get new buy signals, as the trend continues, every time we get a new green arrow, usually on the MACD, then we can move that stop up again 1% below the 50-period moving average. If, like on Friday, if the market drops and the stock falls below the moving average, then our stop adjustment rule is to set the stop usually 3% below the low price of the stock that are on the day that we close below the moving average. So let me show you kind of what that looks like. Intel, we talked about this last week. We bought Intel over here. The stock had given a green arrow on the MACD, the green arrow on the moving average had happened over here. The moving average was rising. It looked like we had broken out and kind of were getting ready to bounce. And so we went ahead and bought that. The green arrows are green until they turn red. And then the day after we bought it, of course, the MACD turns red and it just got ugly after that. But the point is we set our initial stop below the moving average. And then on Intel, what I talked about was, on a volatile market, when the stock gaps over our stop, we were going to get stopped out anyway. So last week I showed some methods of kind of how to handle that, some different ideas. The method that we chose actually increased our risk. And so I wanted to show you that here. Our original stop was at 2111. The stock opened the next morning there about 2068. And so we would have stopped out right on the open. And that's, again, that we're not guaranteed to get stopped out at 2111. It could be, much lower than that. In this case, we would have been stopped out. We changed that stop order to be activated later in the day, trying to give the stock a chance to recover after that big gap down, and it just didn't do that. So at the end of the day, we got stopped out, and we chose in as an example to get out of half of our position, and then we reset the other stop down here below kind of a recent low at about 1921, and then that got stopped out on Friday. And of course, this is one of the most frustrating things about using any stop loss is today the stock is up above where we got stopped out, and now we're kind of cursing ourselves for using stops at all, right? But the point is here is that stop orders do their job. They get us out. The trend has changed. We were, making higher highs and higher lows. It's making lower lows and lower highs now based on our rule set. We just don't want to be here anymore. But what I want to do is show you this trading journal. Check this out. So, we took a look here at the disclosures, but what I did is on the trading journal, I just input this. So let me walk through how to do this, what's already here, just so you can kind of see it. And then I want to make a new purchase today and show you how to add that in there. But on 7/14 is actually when we bought Intel. And if you're going to be scaling out of your position, which is essentially what we did, then the easiest way to use this journal is just to make 2 entries. I put a little note here, bought 21 shares, but scaled out. So I have 11 shares on one line and 10 shares on the other line, and both the same purchase price. And of course, there's no commissions on the online purchase there for the stock. All right. And then we got stopped out on the 25th. And so I recorded that sell date, or put that date in there, and then put the 11 shares and put in this 2053 price right there. And you can see that we lost 27.39. Now, this is the very first thing I want to talk about. We have been investing up to $500 in our position, and the idea is to risk no more than $50, which is 0.5% of a mock $10,000 portfolio. And so you may ask yourself, well, how come we only lost $27 here? Well, so sometimes when we get in, and you'll see this when we do our purchase today, sometimes where we get in and where that 50 period moving average is so far away that the $50 maximum risk per trade that we're trying to implement may cause us to buy fewer shares. And that's also been a question that's come up in some of our previous sessions. Is like, well, how come we're investing up to 5% of our money, so $500 max in every position, but sometimes we're not investing 500, sometimes it's 300. And so the question came up, could we invest like in 21 or 22 or 23 positions, provided that we had additional capital? And the answer, of course, is yes, you could. You just have to, be comfortable with that extra risk. All right. So anyway, I recorded this information. We got stopped out at 27.39 on the loss. And then this is the one that we hit last week, is we had 10 shares left with our stop below. Let me go back to Thinkorswim real quick so you can kind of see what it was. But on, we saw some support in these areas, and we set the stop just below 1931 where that support level was, hoping to hold that. It didn't hold it. Intraday, it stopped us out, and we got stopped out at 1921. And the point that I made last week, and I'm making again today, is that, we ended up losing a little bit more than kind of that acceptable $50 risk. These two together, we lost $50 or $65.49. And so, if you use that methodology that I talked about last week, you ended up losing a little bit more than maybe what was comfortable. And so, one of the things I pointed out last week is if you're not comfortable with that extra risk, then don't do that strategy. So be aware of that. Now, we got stopped out on the first of TXN. So I want to look at this one together too. And the very first thing that we look at when we're looking at an example, TXN, the very first thing I want to know is, did I buy it? Did I do a good job buying this? And this is what you'll need to do too when you're analyzing your own trades and your own investments. Based on our rule set, let's go back in time. We said that this was a valid entry point. Okay, moving average was rising and it was above the moving average. So that's a green arrow. How long are the arrows green? The green arrows are green until they turn red. So that was a green arrow on the moving average, and the MACD had turned green the day before. And so if we came home from work that night and we're looking through our watch list, kind of like we're going to do today here in a few minutes, is we just analyze, hey, is this a valid entry point? And if it is, and if the market's closed, we could put a limit order at the closing price. and then see if that order fills the next day, or we could buy it the next morning if we happen to be there when the market opens. And so we ended up buying the stock here on the 26th of June. Okay. And so when you do that, you would go into the trading journal and you would record that, type in the date, type in TXN, and then we ended up doing one share, because if we did two shares, it would have, I think, put us, the risk amount would have been excessive for there. And we recorded our purchase price, 206.47. Okay. So again, we go back to Thinkorswim and we just ask ourselves, was that a valid entry signal there? Yeah, it was. Okay. Moving average is rising, green arrow on the moving average, green arrow on the MACD, we're in. Okay. Then we went forward a few days, and right here, we got a red arrow on the MACD. Now, all of this time prior to this, on this particular day, we're not doing anything. We're looking at our open position, and we have one very simple question. On the next day, do I have two red arrows? That's the exit rule. If we get two red arrows, it's not even sell it, it's move our stop up. Okay, so like on this day, we could look at that and say, oh, the stock's above the moving average. Guess what? We're done with our analysis. It takes literally seconds to do that. Next day, done. All the way over here. And then on this particular day, on the 15th of July, we do have a red arrow on the MACD, but we have a green arrow on the moving average. So again, this day, do we have anything to do? No, nothing to do. We're done with our analysis. Don't spend any more time looking at that, because we're done. I remember when I first started investing and first started trading, I would sit for, dozens of minutes oftentimes looking at that. Oh, what should I do tomorrow? Well, we create the rules at the beginning of the trade to help eliminate some of that, emotion tied to, oh, I got a red arrow on the MACD, I'm going to lose money. Well, in this case, we ended up losing some money, but the point is there's nothing to do here, right? And there's nothing to do until there. Okay, now what happened here? Well, the stock fell below the moving average. The red arrow on the MACD is still red. The red arrow on the stock. Now, our rule says to move our stop 3% below the low price, which was 185.29, and that puts our stop, I believe it was like 179. Yeah, 179.73. And the reason that we're doing that lower is we're trying to let the stock have an opportunity to kind of bounce around and see if it'll recover or not. Well, in this case, it bounced around a little bit, looked like we might get a bounce over here. And then, of course, on the first, this is where it dropped down, stopped us out. And this is TXN. So like on that particular day, I would go to my trading journal and I would record the exit. We got stopped out at 179.52 and we lost 26.95. Now, here's an important part. If you don't get anything else out of our session today, please get this part, okay? We're willing to lose $50 on a trade. And in this case, we lost $26.95. We should be okay with that. And the whole point of having a rule set and starting off with trying to determine what is an acceptable loss amount is that when this happens, it really should be kind of like water off a duck's back. You just don't really care about what's going on here. You're okay with that loss. One of the big mistakes that most new investors make is they risk too much on their trading or investing. And when some big day like Friday happens and they end up getting stopped out of a few of their positions, those losses are so painful for them that they literally just cannot function anymore. And so work really hard on that. Figure out what number's acceptable to you so that when and if that happens, that you're able to, hey, no big deal. I got a new buy signal. I'm going to go ahead and trade. Okay. So that's taking a look at TXN. The last one that we got stopped out of on last week was Pfizer. Pfizer, again, if we take a look quickly at the buy signal, moving average is rising. Stock looks like it just made a new high. Green arrow, valid buy signal. Initial stop was there at 23.26. And then the stock kind of bounced around, had a dividend, and then it broke the moving average there. And so, we can move our stop up. Usually if the stop adjustment puts your stop below that initial stop, which would have happened here on this particular day, then we just leave our initial stop in place, let it do its job, And in this case, we got stopped out in there when it dropped down below that 23.26. And again, today it's kind of bouncing off support. And we think, dang it, I got stopped out. And if I didn't, I'd be up $1 more than where I was, or not $1, but 40 cents more than where I got stopped out. Well, again, the plan or the rule is to get us out when the trend changes. Well, did the trend change? Higher highs and higher lows, higher high up here, kind of made a little bit higher low in my opinion, then came over here. What happened right here? When that stock bounced down on the 25th, what kind of high is this compared to the previous high? The answer is that's a lower high. The trend has started to change. We made a lower low when we got that red arrow. We moved our stop in this case. Well, we didn't adjust it here because it would have gone lower, but we got stopped out. Why did we get stopped out? Well, we got stopped out because the trend changed. That's exactly what the stop is supposed to do for us. All right. So those are the trades I wanted to go over with you where we got stopped out. I showed you the trading journal, and you could record those in there and use that trading journal. Now, I want to go to the next here is to take a look at Disney. Now, this is just mechanics. I want to show you how to do this. So Disney, we bought over here when the stock was trading at about 118. The moving average was way down here. Check that out. This is so hard for some investors. You know, the moving average rule says to put the stop 1% below the moving average. And I know some of you are thinking, Scott, you are crazy. Why should we put the stop way down here? We can see obviously the last low was there. Can't we just set the stop below there? Yeah, you can do that. You can set up whatever rule you want. We just had a real simple rule. 1% below the moving average. As the moving average rises, we'll move the stop up. That's basically the idea. Okay, over here, we got a new buy signal. Okay, so this is one stop adjustment rule for this plan. The stop is adjusted on a new buy signal. Where do we put it? 1% below the moving average. Okay, so that particular day, the moving average was there about 107.90, and we put the stop where? 1% below that. So I'll just have my hand calculator just for saving time here. But you know, 107.90, right? 107.9 times 0.99. That stop should be about 106.81, 106.82, and that's where it is now. Okay, and that's why did we move it up here? Well, the original stop was down there. Now we're up here a little bit. Now what do we do? Well, we got red arrow on the MACD as of the 7th. The stock was trading above the moving average. We're seeing some lower lows, lower highs. So this trend has already changed in the short term. We're essentially saying if it continues to change and continues to go down, I don't want to be in here anymore. So the rule says, oh, I got two red arrows. Okay, MACD's red, moving average went red on Friday. And so the low price is at 157.57. Okay, you guys help me out here. Okay, 157.57. Where do we set our stop based on the rules? Do you guys remember? Okay, when it closes below there, we're using a little bit more conservative or a looser stop, but we're going to set our stop 3% below the low price. So 157 or 115.57 times 0.97. Okay. So where's that going to go? So we need to stop at 112.10 is where we need that. Okay. So Penny's asking, you know, 1% below where? 1% below the 50 period moving average. And then when we get two red arrows, okay, red arrow on the MACD and red arrow on the stock price here, we would adjust our stop to 3% below the low price, which is, again, 115.57, and that gives us a stop at 112.10. So this is really cool. I've shown this a couple times, but like we have our existing stop order right here. I can adjust this right on the chart. Check this out. Okay, I'm just going to move that up, and you can actually see the numbers start to change. See at 108.60, 108, 109.34. And I'm just going to try to get that up near about 112-ish, 18, and that'll give me this opportunity to adjust it. I'm going to edit this order so it goes right where I want it, which we in this case was 112.10. Okay, and so we're going to make it good till cancel. We hit confirm and send. A little, you know, note down bottom stop orders, no guarantee the execution price will be equal to or near the activation price. We send that order off, and now I have a new stop up here there. And you can actually see today we're actually getting back above the moving average. So hopefully Disney will start trending up again. Okay. We had one other stock where this happened, which was Wells Fargo. Okay. Wells Fargo, we bought over here a few weeks ago and stock broke resistance, went up and made some a little bit lower or higher high a little bit here recently, fell pretty hard the last week or so, gave a red arrow here. And so now we have that 2 red arrow stop adjustment signal. Where do we set our stop? Well, again, we set it 3% below the low price on that second red arrow day, which in this case is 77.40. So 77.40, where's the stop go? You guys help me out again. 77.40, where does our stop go? How do we figure that out? Well, 77.40 times 0.97 will give you where that stop will go, which is 75.07. So how do we move the stop? Well, we just grab our left click and hold this, drag it up a bit, try to get it up there near close, and then it gives us this edit. We're going to edit the order, and we're just going to put it at 75.07. Make sure it's good till canceled. It's a stop order again. So we read the red note, we send the order off, and now we have a stop here. Now, one of the questions I always like to ask myself when I set my stops is, does my stop make sense? Well, old resistance, okay, this is a little technical analysis here. Old resistance will often become new support. Not always, but technical traders will look for this level of support or old resistance to hold as new support. So having the stop below that area makes sense. If you didn't want to move the stop and you wanted to leave it down there to give yourself some extra wiggle room, you could do that. But again, the point here is we're trying to minimize our risk as the stock continues in our favor, which it was doing, and now it kind of stopped. We'll see. If this keeps going down, we're going to get stopped out. We'll have a little bit of a loss, but probably not near that $50 because of our position sizing, right? All right. So there's a couple questions in here. Are you playing with value stocks in this portfolio, not seeing any growth stocks? Well, so value stocks and growth stocks are kind of interesting. Value stocks tend to be stocks that have been beaten up in price. I mean, in hindsight, it would have been great to buy Wells Fargo back here at $58, $59, but it was trending down. So this investing plan generally, I don't know who that is, but this plan in general, because we're buying stocks that are already trending up, that are already above the moving average, and that have already probably come off of their recent lows over the last few months, this really is not a value purchase. These are stocks that probably have, no margin of safety when you're looking at that intrinsic value calculator that we used a few weeks ago. There's stocks where their PE ratios may be a little bit higher than what is comfortable for a value investor. And we'll talk about some of those things. James Boyd does a great webcast on Wednesdays where he talks about the difference between trading growth and trading value type of stocks. But the plan that we're using, this 2 green arrow moving average plan, usually when a stock has gone above the 50-period moving average, it's not really in a value situation too much anymore. It started to trend back up, and that's the objective of this particular plan. Okay, so I wanted to show you, how to do those stop adjustments there and stop purchases. Now I want to take a look at our potential buy orders here. Now, again, we are using, let me just show you, we are using the S&P 500 watch list, or sorry, S&P 100. So these are stocks that are, in the S&P 100. It's a public watch list that's available to you right here. And it's the S&P 100. And we're just going through, again, looking at that very simple rule. Is it above the moving average? Is the moving average rising? And does the MACD have a green arrow on it? So I wanted to look at a couple examples here with you, and then maybe together we'll decide, because we got stopped out of 3 stocks. I can actually buy 3 more. So I wanted to go through, we'll see how much time we have. But the very first one I wanted to look at was Duke, okay? Duke's really taken off here since the open. Duke, you can kind of see Duke was trending up nicely. That trend changed to more kind of sideways over the last several weeks. We had a breakout of a previous high back here on the 21st. Now, we were trading this plan back then, and I did not buy Duke back then because we already had kind of our max number of positions. We already had 20 open positions, and so buying Duke on that day, which was a valid breakout, but the moving average, you can kind of see, you could probably just eyeball it and say, well, the moving average is still kind of falling. So we're not really buying these stocks when the moving average is dropping. Okay. And so if we go forward a little bit, you can see, we got a red arrow here. The stock broke out and then fell back below that breakout point. But at this point, you can see the moving average has changed, right? You can see the moving average starting to rise. And this is, again, what some investors, when they're using this type of plan, they would just wait for that moving average to change a little bit, okay? And so, if the MACD turns green again, we could look at that a valid entry point. Moving average is rising. MACD, if and when it turns green, could be a valid buy signal. And that happened right there, okay? So that day right there, if you wanted to. Now, we've talked about a few stocks that have been kind of in these choppy price patterns where they're trading kind of in a channel. And so some people would look at that and say, well, that is a green arrow. The moving average is rising. The stock's above the moving average. We could buy that day. And the closing price was about 120.48. So we could have bought it right there. Now, I think all of us wish, we went and bought it there because now it's at 124, right? Stock's gone up $4. So sure, but again, I think on that particular day, we didn't have any room in our portfolio to buy another position, okay? So at this point, now we start asking ourselves, well, do I want to get in later? Like in this case, we have some room now. I can make another purchase. So what would qualify us to buy this? Well, the arrows still have to be green. The moving average still has to be rising. But now we have some interesting things that come into play. Let me go on my drawing tools. Here's our last high at 121.97. So some traders will look at this and say, well, this thing has been kind of choppy and sideways. I can see some old resistance in this 121, call it 122 area. I don't really want to buy it unless it breaks out above there. All right. Some people might say, well, this has got some resistance up there, 125.27. This is our last high. I don't want to buy it unless it goes above there. So the question then is, well, what do we do? Let's move forward to today. Stock's been going up. This is where it was. I think that's on Friday. This stock, contrary to most of what the market was doing. Now, why is that? Why would this stock go up? What do you guys notice about Duke? What industry is this in? Well, Duke Energy, what's that sound like? Well, it sounds like it might be like an oil company or something like that. But this is actually a utility company, okay? And so utility companies tend to be a little bit more defensive. And so it's kind of interesting to me that in this particular case, Duke was up on the day the market was falling. But again, we could have bought this on Friday at the end of the day. And I just chose not to because I wanted to wait till today because I knew we were going to do some buying. All right. So here we are today. Now the stock's up another 1%, so we're not getting in. But I just want to tell you, we could have put an order in on Friday to buy on the open today. And if we put an order at the close, 122.91, the low today was 122.70, so that order would have filled, right? So in this particular case, we kind of missed that entry, and it's still up here. Now, this is another thing that's really challenging when you're doing a short-term trade. Short-term traders would probably feel like, I missed this trade. We were looking at a little bounce setup over here, and swing traders like that webcast that Mike teaches on Tuesdays, swing traders may have been buying on what's called the close above the high of the low day. Put that in your notes. Hold, CAHOLD. Close above the high of the low day. It's a little type of bounce entry signal, and bounce traders probably would have liked to have bought that here on the 30th of July. But our system here is basically, it's not short term. I don't like buying at 124 when I could have bought it at 122, but we weren't in class there. So we're going to buy it today. So let's go through this process, and I'll show you how to fill out the trading journal for this. Okay, so the entry then is 124.28. That's about where we're going to get in. Where do we set our stop? Okay, again, based on the rules, the stop's going to go 1% below the moving average. Now I know. Everybody's like, oh, that's so far away. It is. But again, that's kind of how a trend trading system works, especially one with using a slower moving average like a 50-period moving average. But that moving average value, again, if you look right up here, see this number right next to this simple moving average? If I put my cursor on that day, you can see the moving average values at 117.48. So we're going to go in here and say, where does our stop go? You guys help me out. 117.48 times what? 0.99, and that gives us a stop at 116.30. Okay, 116.30 is where our stop's going to go. And so if I wanted to buy this, how can I do that? Well, I can go to the trade page, but check this out. I can just do it right here. I can right click on my chart and I can say buy custom with a stop, and that'll create me an order. And I'm just going to go in there with a market order because the market's open. We're going to set our stop. We said, what was it? 116.80, I believe. 116.80, and we want that stop to be good till canceled. Again, no guarantee that's going to get filled. Now here we can do a couple things. I can try to buy $500 worth of the stock, which I could do about 3 shares, right? Let's shrink this down over here just for fun. If I did 3 shares and I lock that link up here and I hit confirm and send, it'll tell me how much I'm buying right there, 372. And, you know, could we do 4 shares? If we go up here, 1 more share, that's 497. That's about as close to 500 as we can get. So that's probably what we'll do, but I wanted to show you another method, okay? So we're allocating $500 per trade or per position. Why? Because that's 5% of our portfolio value. But we also want to take a look just from a per share standpoint. If I get in there at 124.27 and I have a stop at 116.80, what's that mean for me? Well, let's do the math. 124.25 minus 116.80. Okay, so we're risking about $7.45 per share. And if I take $50 and I divide it by that risk, so 50 divided by 7.45, I can actually buy about 6.7 shares. But if I bought 6.7 shares, then I would exceed my $500 max investment. So in this case, we're going to do 4 shares. We're going to hit confirm and send. You know, realize we have a stop order, doesn't get filled at that price guaranteed. That just triggers a market order, might be filled much lower than that. And we hit send order and we bought in. Okay. Now, last thing we're going to show you here today is how do we put this information in our trading journal. Okay. So I'm going to go in here. I have my purchase at 124.40 or 124.24, and we bought 4 shares. So I'm going to go to my trading journal. And again, I'm just showing you how to use this here, but we take the date. So today is the 4th. We just did Duke Energy is the name of the stock. So you put the symbol there. You arrow over to where it says shares. We bought 4 shares and we got filled at 124. What was it? 24. Usually have to double check this. So we got filled at 124.24. So we would put that in there and hit enter. And now I have that position in my trading journal. And normally you would do this every time you bought a stock. You just put all that information in. And then when you sell it, you record the sell date. But, you know, I didn't put all of our purchases in here. You know, you can keep track of them on the Thinkorswim platform, but that's how you use the trading journals to get that information in there. And then the last thing I like to do on my chart is I actually like to go in and draw a little green oval on the day and about where I purchase it. So I go here to drawings, drawing tools, oval. And if you left click just before the day and then move it to the day after, then you got the nice little oval. And I usually try to put the middle of the oval about where I bought the stock that day. So we got in there kind of mid-range, about 124, 124, or 24. All right. So that's what I wanted to cover today, everybody, is to kind of show you how to do that. I see that there's a link for the survey. We got a survey today. So if you wouldn't mind taking a moment to fill out that survey, let me know what you thought was helpful. I'd really like to know what else you would like to learn about. We are a little bit limited in this portfolio or this particular class because it's stock investing for beginners. So we're not going to be talking about a lot of different things, but we have a webcast and I can direct you to where those go. But if you have some things you'd like to learn about in that beginning investing type of scenario, go ahead and chat that in. You know, I do read through every single one of those comments, and so I love to hear from you. I know several of you have put in many different surveys over the years, and I appreciate that. Let me go here just to our kind of clear screen to finish off our webcast. Thank you everybody for the time you've taken here to be here today. I wanted to show you the trading journal. I wanted to go over the different stocks that we got stopped out of and kind of the mechanics behind that. We adjusted the stop on a few stocks and we looked at a new purchase on Duke. Again, none of that's recommendations. I'm just trying to implement the daily routine that I taught way back on the third session or the third episode of this webcast series. So thanks for being here. Have a great day and we'll see you soon, everyone. Bye.